Why the U.S. is rushing to secure Taiwan, silver, and energy. Economic power shift explained. What Wall Street Trap is really breaking down in this video is simple. The United States is in a global economic race and is moving fast because three resources now control the future: technology, energy, and money metals. First, Taiwan controls most of the world's advanced semiconductor production. Phones, AI, weapon systems, cars, data centers. All of it runs on chips made there. So when the U.S. protects Taiwan, it's not about politics. It's about protecting the backbone of modern civilization. If you lose Taiwan, you lose tech dominance. Second, silver. Most people think gold is the real asset, but silver is the workhorse. Solar panels, EVs, medical tech, military equipment. Every green energy system depends on silver, and supply is shrinking. So while the public watches meme stocks, smart money is quietly stacking metals. Third, energy. No country stays powerful without energy independence. Oil, gas, nuclear, renewables. Whoever controls energy controls production, pricing, and influence. And right now, the U.S. is repositioning to make sure it's never dependent again. These three sectors are linked. Chips need energy need metals need stable supply chains. It's one system, and the government is moving early because they see what's coming. More digital currencies, more automation, more AI, more electric infrastructure, which means more pressure on resources. Translation for regular people: if you only focus on paychecks and bills, you're late. The real wealth shift is happening at the supply level. Technology, commodities, infrastructure. That's where the next generation of power is being built. And that's why the U.S. is moving now, not later. Because in economic warfare, whoever prepares first wins. Let's check out this clip from Wall Street Trapper.
Everything you're watching in the markets right now, silver, chip manufacturing, gold, energy, defense, none of it is random. It's all connected to one global power shift that most investors are completely missing. And in this video, I'm gonna show you who controls these critical inputs, why the US is really scrambling right now while trying to remain calm, and 4 key areas I'm positioned to grow my money during the chaos. So at the end, I need you to be locked in because this one is jam-packed with information. Now make sure you help us get this to 2,000 likes, y'all. We really love it. We really would appreciate y'all. It definitely helps the channel grow and it helps us get into the algorithm. So make sure you like and make sure you subscribe and keep trapping. Let's go. All right, let's look bigger picture for a second before we get into the details. This is not about one headline. This is about pressure actually stacking. So when multiple systems feel the stress in the same time, we're talking about currency, we're talking about bonds, we're talking about geopolitics, we're talking about materials. Well, money kind of reacts before people do. And then that becomes like a currency stress. So the US dollar lost about 10% of its value last year, and it's already down about 1% this year, while gold and silver is soaring. So when people hear that the dollar is weakening, they think it's more like abstract, but it's not. The dollar weakening means that your money buys less at home and abroad. And we're actually seeing a lot of countries right now kind of like get off the dollar, even though the dollar is still the most used currency in the game. What does a weak dollar really mean? Well, the dollar is just a measuring stick. So when the dollar weakens, it means that it takes more of your money to buy the same thing. Not because the things actually got better or provided more value, but because the dollar actually got smaller. Now wait, just listen to me and walk with me through this as I can show you these different areas that's gonna be pivotal not just for investing, but for how you need to be using your money. So if the dollar weakens, that means food costs more. That means gas costs more. That means electronics cost more. That means travel costs more. And rent and services actually get higher. Because many of the things that we buy are priced globally. That's right, they are priced globally. And when the dollar falls, prices rise to compensate. So this is why it's important for you not to just be having your money in a big bank in a savings account. At least you need to have a high yield, because that's inflation, not from just the currency side, also from the goods and services side. And this is why savers are really, I don't want to say the word losers, but you really get impacted, because while your money is really just sitting in the bank, every day you're watching it lose value with everything that's going on. So the number may stay the same, but the purchasing power significantly decreases. So you're guaranteed to lose that way. Even if the number doesn't move like you think it should. You could be like, bro, I'm not even spending my money like that, but I'm not buying the same quantity of things that I did. And that's the trap. You feel safe overall, but quietly you are falling behind day by day, headline by headline. Now watch me here. Don't panic on me. When the dollar does weaken, stocks inflate, real assets rise, commodities surge, and then precious metals shines. So that's the flip side to it. Assets reprice when the dollar gets weak, because nobody wants to hold it, right? And nobody wants to absorb the pressure of a weaker currency. And that's why markets go up even when the economy feels tight. You can be like, bruh, it feels like we're in a recession, but the markets are steady rising. Well, it's because nobody want to be really sitting in cash. They want to find ways to make their money work for them. And so think about it from this perspective as well. Money is moving around globally. Foreign investors don't want their returns eaten up by the currency loss that's going on right now. So when the dollar weakens, money now rotates into gold, commodities, emerging markets, and harder assets. This is why we talked about emerging markets a while back. Not because the U.S. is done. So a lot of people be like, man, the U.S. is cooked. Well, no, but because capital always looks for stability. And that's where the first place I want to go at in this video right here. I want to talk about where we can put our money at for stability. And the reason why we need stability is because a weak dollar doesn't destroy wealth. It actually redistributes it from the savers to the asset owners. And it doesn't mean that the dollar is dead. It means the confidence in the dollar is being questioned. And when confidence weakens, money, well, it looks for somewhere else to go. And so this is why gold is running the way it is. And so gold isn't betting against America. Gold is betting against uncertainty. And right now, uncertainty is the dominant theme in the markets. We're seeing gold hit all-time highs. We're seeing gold hit record levels. And you have central banks that are buying up so much gold. Think about this. Over the last year, central banks have bought over 1,000 tons of gold. And so it's not just affecting gold itself, it's also affecting gold miners. And so these are the two of the places that I really want us to look at, because central banks don't get emotional. They don't chase trends. They just protect the system. And so when we're looking at, situations like GLD, which is the spot gold prices, and AIAU, like these are strategic places that we can put our bread at. And I know you're going to be like, Travis running at all-time highs. Well, I always say basketball is not donuts, which means we look for stocks and we look for equities that can bounce and not fall flat. And gold is the perfect place for this. Why? Because currency is volatile, geopolitical conflict, sanctions risk everything, rising debt loads in China is something that we got to talk about. And people are really weaponizing the financial system. And gold doesn't have to report to anybody. Gold doesn't belong to any country. It doesn't sit on a server. It doesn't have an earnings report. And it can't be frozen, seized, or diluted. Every fiat currency is someone's liability, right? And gold is no one's liability. It's an asset, not a promise. And this is why it sits at the center of the global financial system. Decade after decade, generation after generation, it has always been about gold. Not in headlines, but in vaults. Because central banks can trust it. Countries under sanctions, well, they stockpiled it. And institutions, they hedge with it, which is what we should be doing. It's why we should be trading gold. It's why we should be investing in gold. Again, this is not investment advice. This is just me just saying, hey, y'all, let's be smart about this. So when gold rises, confidence be cracking. Gold doesn't spike because things are bad. It spikes because confidence is in question. And so we shouldn't question the gold. When we see gold and copper and all of these precious metals running like this, that's a sign for us to say, hey, let me get some more of this until all of that gets situated. When debt levels rise, when wars escalate, when trades fluctuate, when the system starts to crack, gold absorbs all of that uncertainty. It becomes the asset of the last place that we can trust. And so while everybody's going to talk about buy this stock, that stock, this stock, that stock, do this, I'm saying let's go with Old Faithful out the gate. And it's not going to let us down. It's been exciting over the last year or so because gold has returned about 70% last year. And it's up double digits this year. That's not normal. It's not. But that tells you that something is off. And it tells us that we need to be paying closer attention. Historically, gold returns about 6 to 12%. We know that. It's always been the safe bet. But when it does multiply and give us double-digit returns, as investors, we are truly supposed to take a step back and say, what is the market telling me? Is there an imbalance somewhere? Is there a collapse somewhere? And that brings me to this. I want to break this down into 3 segments, 3 tiers per se. The first tier is you just simply want exposure. And if you want just that, you can go with GLD or IAU. They track the price of gold and they actually perform really, really good. No drama, no leverage, no crazy headlines. You're just tracking gold prices. Next, if you want a little more exposure, you can go with the miners because they don't just track the gold, they actually amplify it. Why? Because the fixed costs, rising margins when gold sells, they get more exposure and operating leverage. So think about it like this. When gold is up 10%, the miners can be up anywhere between 30 to 40%. That's why I like the miners as well. So you can look at somebody like GDX, which is the major miners, or you can go with GDXJ, which is the junior miners. It is volatile for the junior miners, but they have way more upside. And then you have level 3, which is the quality producer, right? Then you have companies like from that tier 3, you have companies like Newmont, which is the one I like. They not just locked in on the exploration of gold. They got gold, silver, and copper. Now we talking about a global scale, and we talking about a company that now can dominate on all precious metals that are evolving. So this is a lifelong reserve. Their cash flow is tied directly to metal pricing. This is where institutions park their capital for safety. So the safety is not always in just the precious metals itself. It's in companies like Newmont because when you think about it, they're the largest gold miner in the world. They have global operations in the US, Australia, Africa, and South America. They have exposure to gold, silver, and copper, and other precious metals. This puts them in a class of their own. And this matters because copper equals electrification, AI, grid build out. Silver equals electronics, solar, and defense. Newmont isn't just a one-dimensional company. Take the symbol NEM. They're not one-dimensional. And that's what we want in a situation like this. This is a powerful company that we need to look into if you haven't. One, because they have scale to survive. They have small miners struggling and they not them, right? Because when costs rise, permits delay, financing tightens, Newmont can stand strong. Let's backtrack a little bit. Let's talk about something that we talked about. We said when gold and silver is rising, something must be broken. Now, this leads me to the next level of this because in stress markets, capital has to flow. But we got to find what's stressing the market. And once we can pinpoint what's stressing the market, we can see how to invest. This brings up the next part of this video. which is really, really interesting because we talked about this a few months ago and it's rearing its ugly head one more time. Let's talk about none other than Japan. But watch the investment that goes with this. Japan is the most indebted developed country in the world. Their debt is roughly 250% of GDP. And here's what that means just in simple terms. If Japan made $1 trillion a year, well, they owe 2.5 trillion. That's right. They owe more money than they bring in. And that's not a temporary imbalance. That's a system that only works if interest rates stay super low. And what we've noticed about Japan is their bond yields have been rising. So debt becomes more expensive. And when you're already drowning in debt, like Japan is, higher interest costs don't hurt. They actually threaten solvency. Think about a whole country going bankrupt. That's right. Japan has survived this for decades by keeping interest rates at zero. And then that's the deal. So low growth, low inflation, ultra low rates. But once the yields spike, well, that deal breaks. And that's what's been happening over the last couple months. Actually, it started toward the end of last year. Now, what does it have to do with America? Well, it hits us directly in the face. And here's what people like, they not making the connection, and this is why we want to help make the connection because we talked about this before. Japan is one of the largest debt holders of U.S. treasuries. We know that, and we talked about the carry trade before. So when Japan market comes under pressure, well, guess what happens? They have to protect their own system. So what do? They then start to sell their U.S. bonds, right? That means selling their foreign assets, our debt. Now, that puts pressure on the U.S. bond prices. Why? Because now we don't look attractive. And we don't look attractive, you got to increase that, which now push yields higher. And we talked about this before. So now one of the things we got to look at on our market is the 10-year note. Now, tightening yields tells us that the conditions in America are switching. Now, this isn't a Japan problem. It's a global balance sheet problem because there's said to be about $20 trillion connected to Japan. Why? Because everybody was getting this free money and it was bringing it, investing into the American markets, getting 4 and 5% with the American bonds, and then it was swapping it off and it was keeping the rest in the middle. Well, with Japan raising their rates like that, guess what? That trade is no longer attractive. And so now people are trying to get out of that trade because they don't want to get stuck. This is self-preservation. And if Japan's system destabilizes, it sends a shockwave through the entire global bond market. And the U.S. can't afford that right now. Not with everything that's going on with President Donald Trump. So now let's talk about why the U.S. stepped in. So now here's the important part. The U.S. stepped in to help stabilize the yen. That's not generosity, y'all. Nah, that too is self-preservation. If Japan's systems cracks, it spills over into ours. This is why the gold play makes so much sense. This is how interconnected this is, y'all. Like, as I'm reading this and researching and doing the homework to present to y'all, I'm like, bro, we really got to get it together. This is the season where we really got to stack our chips, put our bread in these precious metals, put our bread in some of the other stuff I'm going to talk about in this video, because we got to look for money neutral assets. Not because the system is ending, but because leverage is being unwound right before us. And when leverage unwinds, man, gold doesn't need confidence. Silver doesn't need confidence. It becomes the place where people go for safety. It becomes the reliable house that we all can sleep at night. And so I know why some stocks gonna look attractive. I know why some stocks gonna be looking like they blowing up, but I promise you, when people start selling assets and they start trying to get out of stuff and they start selling bonds, hedge funds don't just sell one thing, they sell everything. And they try to get into cash. And then they've used cash to precious metals. And so this is why we like precious metals right now. Now, I want to take us to the next part of this, which is where things really get intense at. Let's talk about China, because China doesn't make noise. China positions themselves, and the noise often distracts us from what's really going on. So China's broke down into 3 phases. The first phase is the rare earth phase, right? Rare earths are 17 metals They sit at the core of advanced technology, EVs, missiles, satellites, AI, data centers. The problem isn't that there's scarcity because you can get rare earths from all around the globe. The real problem is processing. So China controls about 80 to 90% of rare earth processing. So even countries that mine them, they got to send them to China to be refined. That's leverage. That becomes a bottleneck. We see America investing billions into a company like MP, and you see America just now taking a $1.6 billion stake in USAR, a 10% ownership stake that we talked about last year. And a lot of people made fun of me when I talked about USAR. Oh, what do you think about USAR? Non-trap. And I said, it's okay. And then early in this year, when the year first started, I said, hey, let's revisit USAR. And then I told the people in my Patreon group, hey, it's time to trade USAR. And then what happens today? News comes out that America not only invests in 16 million shares of USAR, but they also have another option where they can get another 17.6 million shares of USAR. Laugh now, cry later. The goal is for us to keep making money. And America is telling us where to put our money because this is why they're scrambling. You can't let China get the lock on this, but I'm lying. I'm not going to lie to you. It's such a cold game they're playing right now. Because these are strategic rebuilds that America is doing. So why USAR and MP? Why do they matter? Well, let's talk about it. This is why I told you to stick around. So you can hit this in detail and so you can see how to position yourself. But wait, there's more after this too, because there's another company I want us to look at. Just rock in with me. America doesn't need to be relying on China. It needs control. So USAR and MP are about rebuilding that control. So MP Materials become the foundation. Remember, they invested in this company last year, right? So what does MP actually do? Well, MP owns Mountain Pass. It's the only large-scale rare earth mine in the United States. Now, these mines can be developed, more can be developed, but it's the building of the facilities that takes years to build. This is not a startup. This is a strategic asset. What they produce? Well, rare earths, right? Especially nodium is what I think that's how you pronounce it, right? And these are good for essentials for EVs and fighter jets and missiles and wind turbines and robotics and AI infrastructure and so many other different things. You got to think about this. For decades, the U.S. mined rare earths and then shipped it to China for processing, and so many other people did as well. It's like mining oil and then sending it overseas to be refined. And then you got to think about it. That whole rare earth processing, well, the reason why people got out of it because it wasn't environmentally safe. It cost a hell of a lot of money. And China says, you know what? We'll do it. We'll build the end-to-end manufacturing. And 20 years later, this is the shift. Well, MP is vertically integrated. So they do the mining and processes, and they do magnet manufacturing. That's what makes this so key, right? And so mining without processing is dependent. So America is searching for its independence in this game, and this is what they're doing. They're trying to reduce reliance on China processors, create their own domestic supply, and allow defensive contractors to be able to do this without geopolitical risk. The Pentagon, they can't rely on China. You can't rely on your rival to help you go to war with them. This is why MP gets policy support and long-term visibility. This is another company we should be looking at. I don't care if it's at all-time highs. We should be looking at it. USAR is the one that I always talk about. It's the multiplier. Now, this is where things get even more strategic because USAR focuses on what China dominates, the processing of magnets. And you might not think this is serious, but I promise you, a magnet is in about 80% of everything that you use. So what does USAR actually do? Well, they do rare earth processing. They're dominant in the magnet game. And this is the choke point that China controls today. When you see America taking ownership in a company like this, you know that it's playing for keeps. You know the chess pieces are moving, but you cannot deny that China is definitely in control right now. And how do we know it's in control? Because last year, what we saw Donald Trump did on October 25th, 2025, we saw Donald Trump talked about fentanyl. And then on this date, October 25th, 2025, we saw Donald Trump drop fentanyl tariffs to 10%. Why? Because China said it was going to deliver its rare earths to America by 1 year. Rare earths aren't rare. It's the processing. Because processing requires heavy capital, environmental tolerance, specialized expertise, and long-term build-outs. And we don't got 5 years to wait. China has been building this over 30 years. The U.S. right now, they're paying for shortcuts. They're paying to secure sovereignty. And so what USAR unlocks is domestic magnet supply for missiles, radars, drones, EV deterrents, no export restrictions, no geopolitical veto. Without magnets, model weapons don't even function. Your cars don't function. Your computers don't function. Your laptops don't function. Your smartphones don't function. And so this is why we need to be looking at both of these companies in our portfolio right now. Think about it like this. MP, they the mine. USAR, they the processor. Together, you can build something strong. You can build your own supply chain. You can build that partial independence. You can build that partial no reliance. Together, they give you strategic autonomy. Now let's talk about the second part of China's stronghold, because I've been watching the strategicness of how they've been moving. Now it kind of goes with what we talked about earlier, but China is actually right now paying premiums above market price for none other than silver. That's right. China is paying $6 to $8 above market price for silver. Why? Because silver is also critical for AI, EV motors, solar, and weapons. And as of January 1st, something we talked about end of last year, I think it was my last video, silver is now on China's restricted list alongside rare earths. This sent shockwaves through the market. So I like plays like SLV. I like plays like SIVR. I like plays like SIL because silver isn't a metal anymore. It's an input. That's right. China placed silver under the export controls similar to rare earths. And because they control about 70% of the supply, that means they're cutting it off from everybody else. This means permits, oversights, potential export limits, not a ban, but a choke point. That's strategy, man. You got to look at how China is moving. And the market don't wait for bans. So this is why we see silver running up, because there is no AI. There is no robots without silver. It is one of the most strategic and critical points inside of everything. And so China is saying, yo, not only do we want to control it, we also want to cut it off from everybody else, because also China uses more silver than everybody else in the world. So they're running through it as much as they need it. They're running through it. So it's a weakness for them, but it's also a strength, because they're the largest users of silver. They're the largest AI, EV, solar, weapons, and they do this. And they don't want supply disruptions. So they stockpiling it. And so when a country stockpiles inputs, prices move before the shortage show up. And this is why you saw people like Elon Musk say, hey, this is a problem that China is doing this. Well, Tesla and you can't, all the outer space, none of that can happen without silver. None of it can happen without magnets. Supply is tight, and it's only getting tighter. So silver supply has a problem. Most silver is a byproduct of copper, zinc, lead minings. This means that supply doesn't scale easily. New mines take about 10 years. Think about that. And demand, well, the demand not waiting 10 years. The demand is getting more and more every single day. And this is how a squeeze starts. Just stay with me, y'all. This is why gold is great. This is why silver is good. This is why we need to be positioning ourselves, because it becomes the leverage. This becomes how we can navigate this game. You don't got to be looking for the next Tesla and NVIDIA and all that. Gold, gold miners. Silver, silver miners. Rare earth processing. EVs, AI, all of it needs silver. It becomes another pressure point. And if China controls the inputs, it controls the outputs. And if it controls the outputs, it controls the leverage. Governments are paying attention. Investors are front running the shift. So no matter what Donald Trump is saying on the news, I want you to be able to roll that lens back and say, what is really happening here? What is really going on? I know he's saying market's going to double and all that, but we got to say, what do we see right in front of us? Inflation fears, monetary debasement, speculation. But yet silver and gold is running at all-time highs. And the last thing on my list, what I would say is the real Trump card that China has, pun intended. Taiwan. Over 80% of all advanced chips come from Taiwan, and most of them come from TSM. You can build factories. Of course, Taiwan just told Trump that they're going to invest $500 billion over here, but you can't replace that overnight. And if China controls Taiwan, they control advanced computing. And we've seen China over the last year build boats, build warships, build everything to take that country over. We've seen them, even in their president, in their New Year, say that Taiwan is coming back home. And I think everything we talked about comes down to one company, TSM. They do one thing, and they do it better than anybody else on the earth. It manufactures advanced chips for the world. Not design, not software, manufacturing. And they manufacture for people like Apple, NVIDIA, AMD, Qualcomm, Broadcom. While all these people saying they want to compete with NVIDIA and this and that, they all depend on TSM, who just had a stellar earnings call. And if chips are the oil of the modern world, TSM is the refinery. And so what I want us to understand is this. We like irreplaceable companies. And here's what most people truly don't understand when it comes to this game and how do we truly be successful. If 80 and 90% of advanced chips come from Taiwan, 75% of them come from TSM alone. These are cutting edge chips, y'all. AI accelerators, data center processors, military systems, smartphones, autonomous tech, everything that's going to lead the world forward. You can't replicate this overnight. And so when I look at China and how they positioning themselves, even though Donald Trump has a big bark, China is saying, we're going to run this thing. Because chip manufacturing is capital intensive, tens of millions of dollars for fabs. Experience for decades. You can't build those factories. You can't rebuild mastery. And so this is why China is putting itself in that situation. So think about it. If China controls the silver, if China controls the rare earth processing, and if China dominates and takes over Taiwan, they're strategically put themselves in position to be the most dominant country in the world for a very long time. And that's out of our control. What we can do is we can invest in gold, we can invest in silver, we can invest in rare earths, we can invest in Taiwan semiconductor, and we can invest in defense because we know America ain't gonna go down without a fight. And if China controls Taiwan, they control supply chain, AI scaling, and military tech. Think about this. The same country that you want to go to war with controls your military technology. And this is why the U.S. is scrambling to restore chips with the CHIPS Act, and billions are being spent in Arizona. Even with the U.S. fabs, TSM will remain light years ahead. And so these are things that I want you to pay attention to going into this week. It's your boy, the Wall Street Trapper. I hope you learned a lot from this video. I hope I helped you out. I hope I gave you some game. I hope I pulled the hood up just a little bit to help you see it. Because our goal is to help you build wealth one share at a time. I see y'all in the trap, man. Salute.